Hi, welcome to my YouTube channel on long-term investment, which is about managing your money and securing your future. In our last video, we have finished looking at the candlestick patterns, which are either single candle, double candle or three candle patterns. And today we are going to see the chart patterns. Chart patterns are slightly different from the candlestick patterns. Candlestick patterns are based on the single candle, whereas chart patterns is based on the number of candles or combination of candles. So what is a pattern? Patterns are the distinctive formation created by the movements of security prices on a chart. These patterns reveals the ongoing struggle between the forces of supply and demand, as seen in the relationship between the various support and resistance level, and allow the chart reader to see which side is winning. Usually these chart patterns are formed by support and resistance level. The price patterns are broken down into two groups, reversal and continuation patterns. Reversal pattern indicates that a trend is about to reverse, and continuation pattern indicates temporary pause in the existing trend. First pattern, head and shoulder pattern. The head and shoulder pattern called head and shoulder because it looks like a head and shoulder pattern. It is the best known and probably the most reliable of the reversal pattern in an uptrend. Here in this chart you can see there was a portion which looks like left shoulder, and then there was a neck, and then this is called as a head, and again prices moved up and this is formed as a right shoulder. And when prices break down below this neckline, this is the indication that the prices have broken the support and the trend has changed from uptrend to the downtrend. Each of these candlestick patterns has the inverse of that. So inverse head and shoulder pattern will form in the downtrend. This is similar to the same pattern, but it is only upside down of the head and shoulder pattern. The inverse head and shoulder is best known and probably the most reliable reverse pattern in the downtrend. Again here you can see this is as a left shoulder, then this as a head, and this is as a right shoulder, and this is the neckline. So once this neckline is broken, the market will move into the uptrend. So earlier the trend was down here, and then it has moved into uptrend. This is the inverse head and shoulder pattern, and ideally all these patterns you will see they are formed due to support and resistance. So this was the resistance level, this was the support level. A double and triple top and bottom pattern. Again, this is another one of the reversal pattern. The double and triple top or bottom is a variation of head and shoulder pattern. The only difference is that three peaks or throughs in this pattern occur at the same level. In case of head and shoulder pattern, they are not at same level. The head is either protruding above the in the uptrend, or it is in the downtrend. It is going below the other two levels. Here you will see double top or triple top. The levels are same. Like this is the double bottom, which shows that the downtrend from here has been arrested, and this was the resistance. When it was broken, uptrend has started. Similarly, double top. Double top is a reversal pattern for uptrend. Here, prices have risen from this level until this point. Here they face the resistance. They have moved down. They have formed the support here. Again, they have tried to break the resistance level here, but that attempt was not succeeded, and then they have come down. So when this level is broken, if prices remain here and keep moving it here, so it will not be double, it will be triple top of bottom. But when this level is broken, it is confirmed that the trend has changed from uptrend to downtrend. Then spikes and saucers pattern. The spikes top, also called V reversal, pictures a sudden change in the trend. This is a sudden trend in the change. Like earlier the stock was in the uptrend and suddenly there is a V type shape. Similarly here, this is a reversal of this spike bottom. spikes and saucer pattern. Spikes, then this is a saucer pattern. This is called saucer because it looks like a saucer. This is like this, yeah, saucer. The saucer by contrast reveals an unusually slow shift in the trend, most often seen at bottom. The saucer pattern represents a slow and more gradual change in the trend from down to up. Here you can see the bottom is formed, which is the support level for this stock, and these are the resistance level. So when this resistance level are broken, you can confirmly say that trend has changed from uptrend to downtrend to uptrend. I'm stopping here. Today's session was very short because we have only seen the these patterns on the chart patterns. In our next video, we will cover triangles and price gaps. Before this, we will also see the patterns which are formed on the real life, like our NSE and BSE stocks. Here, this is an L&T daily chart updated up to 4th of February, and we can see this is the double top pattern here. So when this resistance was broken, the prices moved from 3700 level till 4080. Similarly, this is like double bottom here for the Reliance stock. This is also updated until 4th February. We can see it here. All these chart patterns are nothing but break of support and resistance level. This is very important in the technical analysis. The support and resistance, and without support and resistance level breaking, the trend will not form. This is again ICICI Bank. Here we can see in this chart, this was probably the double bottom. The prices were downtrend from 1335 till they touched the 1201 or 1200 level, and then twice they have touched this support level, and from there prices have bounced to 1460, 1470 level. So this was the ICICI. We are almost at end of our technical analysis learnings, which is a part 1 of our long-term investment planning. And along with triangles and price gaps, in next video we will cover these 2 chapters, and after that we will just have a recap of all these things that we have learned, and then we'll go to our actual motto of long-term investment. So with this note, we stop here. I thank you for watching my channel. Please keep watching this space, subscribe and like it, share with your friend, and thank you very much. Have a nice day. Thank you.